Microinsurance has grown very rapidly over the last 8 or 10 years, and there have been many factors that have pushed microinsurance. In many ways, in most countries, the factor is actually individuals. You have individuals and insurance companies, individuals and delivery channels who push to make something happen. It's been an interesting progression to watch it grow. Several years ago, in 2007, when the MicroInsurance Centre did the landscape of microinsurance in the world's 100 poorest countries, I expected that what we'd be able to see is that I could look at a map of microfinance growth and I could onlay where microinsurance growth had been. And I was surprised to see that that wasn't it at all, that there wasn't a real direct correlation at all. And when we dug down deeper, it was a lot of individuals who thought this is a solution that we can have for low-income people. Where we've seen some of the most growth in terms of volumes have been places like India. And clearly, we can't ignore the fact that regulation is the primary driver for that. In 2002, I believe, India passed a regulation for commercial insurance companies that they had to provide insurance to the social and rural sectors, rural being defined by geography, social basically being the poor. It forced all insurers to do this, and it had significant quotas and significant penalties if the insurance companies didn't meet these quotas. So you have a lot of advancement in microinsurance, some interesting products, interesting delivery mechanisms, but that have been pushed by this regulatory promotion. You have other countries, though, that have grown. We look at Colombia and Uganda, for example, that have grown strictly on commercial examples. The commercial insurance industry has seen this as a market. They've been pushed a bit, and they've done substantial business without any regulatory intervention at all. Maybe a little regulatory forbearance in terms of some of the technical issues like people who are able to sell, the technical definition of agents and what those are required. But regulation has had an impact in some countries, commercial approaches have had an impact in others, and individuals themselves have had an impact in others. It's a very interesting market to watch, but all three of these pieces are coming together to create really substantial growth. The study that we did based on data in 2006 showed 78 million people covered by microinsurance. Now I would estimate that that's about 135 million people covered by microinsurance. We just finished with the ILO's Microinsurance Innovation Facility. In November, they published a landscape of microinsurance in Africa, showing 14.7 million people covered by microinsurance, which is a substantial growth. We figured about 30% from the 2006 numbers. There's really very significant growth going on here. And what we're finding, more importantly, I think, is in terms of quality of product. In the 2006 study, and indeed in the 2009 study, we found the primary, the one product that is most prevalent is credit life insurance. And I would argue that there's relatively limited value to clients for credit life insurance. And clients across the globe will tell you, credit life is not for me, it's for the institution. But what we're seeing now, which I think is a very positive thing, is that we're starting to see the gap between credit life and the other types of products, health insurance products, life products for family members, starting to narrow. And so what I'd always thought, and it obviously makes sense, is that there would be an evolution in product development over time, that we'd start with easier products, and clearly credit life is about as easy as you can get in insurance. And as insurers became more comfortable with the market, then they'd start to move to more complex products. The evolution hasn't proven to be as easy as that. I guess maybe I was too optimistic. It requires push from the delivery channel, but what we see is that the push from the delivery channels actually can be very effective in getting them to move. When they are pushed to do more, they do more. And so we are getting more products that I would say have real value for families because we're getting a push from the delivery channel and we're getting more receptiveness from the insurance companies who are becoming more comfortable with microinsurance. I would say the biggest challenge in microinsurance today is the challenge of delivery. I think we're getting better products, we're getting products dealt with, we're working on pricing and improving that, but what we need is a way to get products out. It used to be that commercial insurers would ask me, what is microinsurance? Now they know what microinsurance is. What they want to know is, how do I get more clients? How do I access more of the market? How do we generate more volume? And this is where the big issue for microinsurance is today in delivery. How do we get this out? We have to look at both active and passive delivery channels, and we have to figure out how to make those work better. We also have to figure out how we can get the market to be more receptive and more understanding of microinsurance so that the passive channels can be more effective. But there's a huge market out there. We have to work to find more and more ways that are efficient and effective at getting good products out to the market. But this is clearly, for me, the big problem. Fundamentally, microinsurance has to be low cost. And we have to continually work at reducing the administrative cost portion of microinsurance so that we can continue to offer better and better quality products and coverage. And in doing that, we're going to have to look more and more towards technology. How can we get technology to help us to manage and deliver microinsurance products? And I think there's still a big question as to what role humans are required in, what role can we intervene with technology. We can't say we'll send an SMS message to a client and all of a sudden they'll buy health insurance. They need something else to help them do that. But once that's done, can we expect that people can pay their premiums through cell phones? I suspect so. Can they initiate their claims and even make or get settlements from claims on cell phones, for example? I think they can. I think there are lots of ways that technology can really bring down the cost of microinsurance delivery and management, and in that way, again, help us to offer low-cost products that have real value to clients. But technology is really one of the keys to the future. Effective delivery is going to require an array of delivery channels. Microfinance institutions have an important role in that, but to be honest, they have to start looking more and more at better products. We need to make greater and greater improvements at reducing that gap of credit life and better quality products. I would expect that over the next several years we'll see a greater proliferation of these better products, but they will be through an array of mechanisms, including microfinance institutions. I think they have a very important role because fundamentally they're there in the market. They're helping people understand the benefits of financial products. What they need to do is do a better job of representing their clients in providing products that clients really want. Over the last 10 to 15 years, we've seen a movement in microcredit from basic group credit into an array of different products, right? We have household loans and we have individual loans for all kinds of purposes. We have high-level loans and low-level loans. I think we need to recognize that as we saw the need to respond to client needs and expanded out the breadth of microfinance products, that now we need to also think about expanding out the breadth of microinsurance products. Microinsurance will never be a core product for microfinance. It will never be. But it is a product that can enhance the microfinance products that they offer now. It can help their clients be more stable. It can add loyalty. It can add a sense of greater stability within the market that microfinance institutions are working in. So there's a very important benefit here for MFIs, and they can provide a very important foundation stone for much broader growth in microinsurance.